The Trump tariffs may reshape the global trade dynamics, hitting the US, the EU, the UK, China, India, and Asia-Pacific hard. The term Liberation Day in the context of tariffs refers to a significant policy move by the U.S. government, particularly under President Donald Trump, to impose sweeping tariffs on imports. These tariffs are aimed at reducing trade imbalances and encouraging domestic production. Tariffs often lead to higher prices for imported goods, which can increase costs for consumers and businesses. They may boost domestic industries in the short term by reducing competition from foreign goods. However, retaliatory tariffs from other countries can harm U.S. exports and disrupt global supply chains. Countries targeted by these tariffs, such as China, Canada, and the European Union, may impose their own tariffs on U.S. goods, leading to trade wars. This can strain diplomatic relations and create uncertainty in international markets. Increased tariffs can negatively impact stock markets due to fears of reduced corporate earnings and economic growth. Policy uncertainty surrounding tariffs can lead to volatility in financial markets. Higher import costs can contribute to inflation, reducing consumers' purchasing power. Businesses may pass on these costs to consumers, further impacting household budgets. While the intention behind these tariffs is to protect domestic industries and jobs, the broader economic and geopolitical consequences can be complex and far-reaching. In the U.S., consumers may face higher prices on everyday goods, while manufacturers struggle with increased costs for raw materials. The European Union retaliated with its tariffs, targeting iconic American products, which may strain transatlantic relations. Meanwhile, navigating its post-Brexit identity, the UK finds itself caught in the crossfire, trying to maintain trade ties while adapting to new barriers. The impact of a 2025 Trump tariff would likely follow historical trends but also depend on the specifics of the tariffs, trade negotiations, and broader geopolitical developments. For the US, it would likely benefit some industries while harming others. For the EU, UK, and Asia-Pacific regions, the tariffs would increase costs, disrupt trade, and create economic uncertainty. China and India would be particularly vulnerable due to their reliance on trade with the US, with China facing more direct consequences due to its central role in the trade war. Ultimately, global supply chains would continue to be disrupted, and trade relationships would shift in response to new tariff policies. Domestic producers and consumers, certain industries in the U.S. could benefit from tariffs if they are designed to protect them from foreign competition. U.S. steel and aluminum producers, for example, saw some benefit from previous tariffs. U.S. consumers would likely face higher prices for a wide range of products, particularly if tariffs are imposed on Chinese goods or other global suppliers. Items like electronics, clothing, and machinery could see price increases, leading to inflationary pressures. The higher cost of living could reduce consumer purchasing power. U.S. farmers might again face retaliatory tariffs, especially if the tariffs target agricultural products. In the past, China and the EU imposed tariffs on American agricultural goods such as soybeans and pork. This could harm U.S. agriculture, especially in rural areas that rely on exports. Similar to 2018 to 2019, the U.S. government might provide subsidies to help offset losses in agriculture. Trump's tariffs are generally aimed at reducing the U.S. trade deficit, especially with countries like China. While tariffs can reduce some imports, they may not fully eliminate the deficit, and other countries might retaliate with their own tariffs. Trump tariffs were a bold move in the trade game, aimed at protecting American jobs and industries. By imposing taxes on imports, particularly from China, the idea was to level the playing field for U.S. manufacturers. But it isn't just about economics, it stirs up a political storm. Critics argue it can lead to higher prices for consumers and strained relationships with allies. Farmers feel the pinch too, as retaliatory tariffs hit their exports hard. The trade war is a double-edged sword. While some industries thrive, others struggle to survive. Ultimately, it sparks a national debate on globalization, protectionism, and what it truly means to put America first. The impact of these tariffs will be felt for years to come, shaping the future of international trade. If Trump imposes new tariffs on European goods, there could be significant trade disruptions. The EU's economy is deeply integrated with the US through exports of automobiles, machinery, and agricultural products. Sectors like automotive manufacturing, luxury goods, and agricultural exports could see increased costs, hurting European companies' competitiveness in the US export market. The EU would likely retaliate with tariffs on US goods. Previous examples include tariffs on American motorcycles, bourbon, and jeans. The EU would target goods that hurt US businesses or products that are politically sensitive in the US. This could further strain US-EU relations and escalate trade tensions. A sustained trade war with the US could slow economic growth in the EU, especially for export-driven countries like Germany. The EU might also face difficulties in negotiating new trade deals with other partners, as uncertainty over US trade policy could affect the global trading environment. As the UK is no longer part of the EU, it would need to negotiate its own trade agreements with the US and might be vulnerable to tariffs if the US imposes them. While the UK has a strong trading relationship with the US, it could face challenges if Trump's tariffs affect key sectors like automobiles, pharmaceuticals, or agricultural products. If the US imposes tariffs on British goods, the UK may retaliate by imposing tariffs on US exports. The UK would likely prioritize protecting its core industries, but this could further complicate the post-Brexit trade environment and hinder the UK's recovery post-COVID. British consumers could experience rising costs for US products, especially technology, agricultural goods, and luxury items. This would exacerbate the UK's cost of living crisis and slow economic recovery. Many Southeast Asian nations have benefited from shifting manufacturing out of China due to US tariffs. If Trump continues to impose tariffs on Chinese goods, countries like Vietnam, Malaysia, and Thailand might see increased foreign investment as companies look to diversify supply chains. However, these countries are not immune to US tariffs. If the US shifts focus to other countries or imposes tariffs on goods from Southeast Asia, it could slow their export-driven growth. Japan, which has a strong trade relationship with the US, would likely feel the impact of any tariffs on key exports, especially automobiles and electronics. Japan could face a reduction in its competitiveness in the US market. Additionally, Japan could be drawn into trade disputes, especially if Trump targets specific industries. Japan might also face retaliatory tariffs from China or other trading partners. As a close ally of the US, Australia is unlikely to be heavily targeted by tariffs. However, trade disruptions or tariff escalation could still affect key Australian exports, including agricultural products and minerals. Australia could also face higher costs for imported goods, potentially leading to inflationary pressures. As we look ahead to 2025, the potential impact of Trump's tariffs on South Korea and Taiwan is a hot topic. South Korea, a major player in electronics and automotive industries, could face significant challenges. Increased tariffs might drive up costs for companies like Samsung and Hyundai, potentially leading to higher prices for consumers. On the flip side, Taiwan, known for its semiconductor prowess, might see a mixed bag. While tariffs could disrupt supply chains, they might also boost local production as companies seek to avoid penalties. This could be a double-edged sword, encouraging self-reliance but also risking trade tensions. Both nations will need to adapt quickly, navigating a landscape that could reshape their economies. The stakes are high, and the ripple effects could be felt globally. How will they respond? Only time will tell. China would likely be the most impacted regionally if Trump continues or escalates tariffs. The trade war between the US and China has already slowed China's economic growth, and new tariffs could exacerbate this trend. Chinese exporters would face increased costs and reduce competitiveness in the US market. China's economy, however, has shown resilience, and it may redirect its exports to other markets, including Europe, Africa, and Southeast Asia. China would almost certainly retaliate with its own tariffs on US goods. In the past, China targeted agricultural products like soybeans and pork, which hurt US farmers. China could also impose tariffs on American technology products or other goods, leading to significant disruption in global supply chains. China may continue to strengthen its trade relationships with countries outside the US. This includes focusing on initiatives like the Belt and Road Initiative (BRI) to deepen its ties with emerging economies, particularly in Africa, Latin America, and Asia. India could be impacted if Trump imposes tariffs on certain Indian exports. The US is an important market for Indian goods, particularly IT services, pharmaceuticals, and textiles. Tariffs on these products could hurt India's competitiveness in the US market. However, India has increasingly diversified its export markets and might mitigate the negative impact by strengthening trade ties with the EU, Japan, and Southeast Asia. In the short term, tariffs could slow down India's economic growth if its export sector faces higher barriers. However, India could also benefit in the long run if companies move their supply chains from China to India, capitalizing on the diversification of manufacturing. A US tariff war with China might also have geopolitical ramifications for India. India could be positioned as a key partner for the US in countering China's influence, which could open up new avenues for trade and cooperation, especially in the technology and defense sectors. While tariffs can be a tool in addressing specific trade imbalances or protecting domestic industries, they are not a comprehensive solution to trade wars. In many cases, they can exacerbate tensions, lead to retaliation, and harm consumers. A more balanced approach that includes negotiation, collaboration, and reform of international trade agreements may be more effective in resolving trade disputes and promoting long-term economic stability.